of August is out and the number is 2.6%. Latha, without wasting any time, good, bad, okay?
Well, it looks a little better than the month of July when we did 1.1%. But otherwise, it's not very impressive. In May, we had done 4.4%. In June, we had done 3%. July was a bad month, and August is turning out to be only marginally better than the June number. To go to individual numbers, it's electricity which is slightly heartening. It's risen by 5.6%. We used to do double digits practically all of 2014 in electricity growth, and then it started falling around April, May, and it was very clear that the discoms were not buying. We saw some pathetic numbers in April. May was okay, June, July. Now it has come back in August to 5.6%. So clearly there is some bit of an improvement in the situation, but it's nothing like the double-digit kind of growth that we saw. Maybe some discoms have put together some money. Cement is not bad at 5.4% for this time of the year. It's a good number. We saw only 1.3% growth in the previous month, and for the longest time cement has not seen this, not since perhaps Diwali has cement seen such a decent number. Steel continues to be a beleaguered sector, and that's because there's so much of cheap dumping of imported steel, as well not too much of demand, and steel is a minus 5.9, so a contraction. Fertilizers are exceptionally well, 12.6%. The prices have fallen, and there has been good offtake, at least in some regions. 5.8% in refinery products is definitely an improvement. Natural gas is 3.7, but that's just because the base is so pathetic that it has to look better at some point in time. Crude oil is 5.6% growth. Coal is a huge disappointment, 0.4%, and coal was growing at 7% up until 2 months back, and we thought that Coal India will deliver a very good number, but clearly the inability of discoms to buy more power and therefore the need for less coal from the power plants is all adding up, and Coal India output or coal output in the country has remained flat for the month of August. Okay, we have a veteran watcher of the numbers, Dr. Soumitra Chaudhary, former member of the Prime Minister's Economic Advisory Council and the Planning Commission, joining us. Dr. Chaudhary, good evening. Thanks for joining. So what have you made of this 2.6% core sector growth? It comes from over a tepid 1.1% in July as well. Things not creaking up, you think?
No, the core sector is not necessarily a very good predictor of industrial output, because the core sector, the oil is a very heavy in component. So if you got a negative crude oil growth in that month, it generally pulls the overall number down. If it got a slightly positive number like this one number for this month, it may have pulled the number up. So it doesn't tell you very much about what's actually happening in the industry. What does tell you to some extent is coal, electricity, and petroleum products. Now, petroleum products, as I've said, it has shown a pretty good, steady growth. This year, petroleum refinery consumption growth is quite good, partly because prices are lower, people are driving more. But there is a good demand around 5 to 6% growth in every month. It's quite steady. The second is, you're quite right, one of the reasons why coal output is not growing is because of the slack demand by the thermal power companies, and power generation up to the month of August, from December onwards, has been quite pathetic. Till November it was very strong, but after that it declined to the low single digits, 2, 3, 1, and coal has basically followed more or less that trajectory. But for September, which will be released in 1 month later on, if you look at the September generation figures, that gives you heart. Because up to the 24th of September, in September, electricity generation was up by about 15%. Which is quite extraordinary, given that fact that there's been for a more remarkable change in the status of the power, the financial status of discoms. So there must have been a big surge in demand, because it is not only 15% growth, it is far ahead for the first time in the last 7 or 8 months. First time actual generation is ahead of the target program that they have got.
So either some discoms have been set right, or there is demand coming from outside discoms.
I don't know. That's what it's a bit of a mystery, because discoms, nothing much, maybe some minor changes may have happened, but nothing major has happened in 1 month's time.
Okay.
So this must be in terms of demand actually materializing.
Fair point.
That demand which is show, we can see that, in the case of IIP, the numbers for up to July, from June and July numbers have been more strong.
Okay.
Though it is not across the board, it is still sectoral.
Fair.
And I suspect that sectoral thing is perhaps spreading out a bit, or perhaps some sectors have become strong. I cannot explain it otherwise.
Okay.
But the fact of the matter is, in September, electricity generation growing at 15% must be telling you something which we shall find out perhaps over the next 1 month.
Thank you very much for joining us with all those details, Dr. Chaudhary. So, disheartening number, but probably September is going to be a different set of numbers altogether.
Well, let's certainly hope so, Latha. We'll of course have Latha back with us over the next couple of hours to get us more details on that. But let's go back to that World Economic Forum report, wherein India has jumped up 16 points in terms of its competitiveness. Margareta Drenzik-Hanaus, the lead economist of World Economic Forum, joins in now to talk more about the report. Margareta, so sorry for keep you waiting. You are one of the authors of the report. A jump of 16 places as far as India is concerned is definitely an improvement, but where does India stack up when you compare it to the emerging market geographies? Because of course China is steady at the 28 position, if I'm correct, but we are still ahead of Brazil. Where do we stack up in the BRIC pack?
Well, in comparison to many of the other large emerging markets, India still has a number of challenges that it faces. In particular, with respect to improving infrastructure, the macroeconomic environment, although it has improved slightly this year, is still relatively weak, with troubles in public finance, relatively high deficit. We also see infrastructure deficits throughout the country, and at the same time India has pockets of excellence in terms of innovation and in terms of technological readiness that need to be exploited further and spread more throughout the country.
Okay, so now let's talk about the positives, Margareta. The key factors that you mentioned is macroeconomic improvement. There are some areas of infrastructure improvement. Specifically, if you had to point out about 3 to 4 reasons which makes India stand out in terms of its competitiveness, what would it be?
Well, first of all, the large market size, which is an important advantage for India, and as it allows for economies of scale to be exploited, then definitely, as I said, there are pockets of excellence in terms of technological readiness, in terms of innovation across India, but they are not spread out. Also in terms of business sophistication, so a number of businesses are quite sophisticated. And then an important factor these days, access to finance appears to be easier in India than in many of the other emerging markets, and that's an important factor for business growth.
Margareta, in terms of maintaining this pace, we've jumped 16 points. To maintain this pace, what specifically needs to be done to maintain and of course probably claw in more share of that?
I think continuing the reform course that was announced, that was started in the recent year, taking advantage of the momentum and really implementing the reforms throughout the country. It's a large economy. It needs to be implemented evenly throughout the different areas, the different geographical areas of India. This is an important area, and I would in particular point out that institutions where we have seen improvement in terms of reducing red tape and reducing corruption as well is an area that India needs to focus on, just because this is an area where we see some spillover effects also into the other policy areas. If institutions improve, then it's easier to implement other reforms as well, and they tend to be more effective. So we would have higher effectiveness and faster growth.
Margareta, if you look at the infrastructure issue, as you said, there has been marginal improvement in infrastructure, but bottlenecks still remain. So specifically, over the last 1 year, what has been done to improve infrastructure which gave you the confidence for that 55 ranking? And what specifically do you believe are the bottlenecks? Is the capital issue with respect to the infrastructure sector still prevalent?
So the improvement has taken place. We used the data from an executive opinion survey. So we ask executives about their opinions about the quality of the infrastructure, and that's where we see the main improvements happening. Obviously, the access to capital for infrastructure is still very important. Financing of its infrastructure is still very important, and India still has an important infrastructure deficit. The improvement is, as you said, relatively marginal.
Relatively marginal. Okay, so in that case, specifically what or how long do you believe, I know we don't have a crystal ball here, but how long do you think it will take for those bottlenecks to remain? How rigid are those bottlenecks? You think about the next 1 or 2 years, we would be able to arrest those concerns?
I think it's a long-term process. 1 or 2 years seems actually quite a short time frame for me, because addressing infrastructure bottlenecks takes actually quite long, much longer in most of the economies that we have seen.
Okay, so let's quickly compare this to, I go back to my first question, comparing India to the emerging market geography. There of course has been volatility that we've seen in Brazil, we've seen in China. China nevertheless is of course steady on that list, but do you believe that the volatility in the emerging market geographies would be a benefit for India?
Well, India is not very linked with other emerging markets, but still there are some linkages, and I believe that the volatility in other emerging markets is not going to be good for the global economy, it's not going to be good for demand, for global demand. So if India is looking at growing its exports as well, it cannot have a positive influence on India.
Okay, so we won't necessarily be able to cash into the opportunity that the volatility there would present. If anything, it would be a negative.
If anything, we will see significant spillover effects so meaning that the demand or the growth in advanced economies will also slow down as a conclusion.
As a result of that. All right, Margareta, thank you so much for joining in with that. Apologies once again to keep you waiting. So that was Margareta from the World Economic Forum, who is an author of that report. We've done 16 points. It's definitely good news, but some way to go. Even then, let's take a short break. On that note, news and updates will continue on CNBC TV 18. Stay right there.
CNBC TV 18, celebrating 15 years of leadership.